Let's talk to Todd Horwitz here this morning to get his thoughts on these markets. That crude oil and the Dow also headed higher here today. Todd, I was reading some of your comments from just a little bit ago, and you were commenting, "Don't follow the news," and you say that a lot.
Well, John, good morning. Listen, if you try to trade the news, you lose money because at the end of the day, most news is already priced into the markets, okay? Again, markets are so efficient today, and with information flow so fast, we know where the problems are, we know what the issues are, so markets already price that information in well ahead of time, so by the time the news hits the street, it's way too late to try to jump on board with that news, which is why the price action is so important. And we're seeing some interesting price action in all markets that you mentioned, including the grain market. So there's a lot of things going on.
Let's go to the corn market. Now, we did start out with a little bit of firmness here today in the grains. Right now, it's awfully quiet. July's unchanged. September is down a quarter. Earlier, when Marlon was talking about these, they were kind of waffling back and forth between a quarter higher to a quarter cent lower. March, the far out there, March is down just 1 penny. Over in the soybean market, we've got gains here. July up 4 3/4. The November up 5 3/4. It's at 8.51 1/4. The wheat market in Chicago, kind of nearby where Todd's located at. The July wheat is down 3 pennies. It's at 4.97 1/4. So we have fallen below that $5 level. And in the Kansas City wheat market, we're down 5.5 cents on the July contract, 4.46 3/4. Minneapolis wheat here on this Monday for July is down a half at 5.05 3/4. Todd, what should a producer be keeping a sharp eye on then to maybe take some cues from some of these markets?
Well, John, I think when you look at the grain markets, yes, they look ugly, and they have been. We have been on sell signals for them for quite a while. But again, I keep hoping and looking for an opportunity to buy and hoping that they're going to start to move higher. And I think the price action now suggests that we're getting very close to a breakout to the upside. We have the ability in corn and beans, at least, to hold the recent lows. I think that's very bullish longer term. And I do think that with the economy starting to open, I think we're going to start to see some of this supply taken away, and we will have a little bit more demand, which will be great for pricing. And I do expect to see soon a break to the upside and look for much higher prices. The action is still not great, but as long as we have the ability to continue to hold the lows that they put in and make higher lows, that will indicate that we'll see a much bigger rally. And I think that it's coming, and I'm hopefully going to be ready for it, and hopefully everybody else will. But that's one of the reasons we always stay hedged, is so we don't have to worry about these things that do happen on the way to the ranch, as they say.
Yeah, exactly right. What about the crude oil price? We've seen quite a rebound here. And last time when we went into the final little bit of trade for the May, things just collapsed. Does it look like that could happen in crude oil this time around, or do you think the worst is behind us?
I think the worst is behind for now. Again, obviously, if the economy stays open and if everything starts to move, we'll get a bigger demand. Now, remember, the difference between farmers and shale producers is shale producers can turn off the run, and they don't have to produce anymore, so they can burn out their supply. Unfortunately, farmers, once they're planted, they can't do that. So I think what you're going to see here is the prices should steady. I think they're a little bit overdone here. But again, at the end of the day, we identified when we should be hedging and protecting against this up movement. And I think at some point here, we'll see it, and oil will probably settle back in the mid-20s before it's all said and done. But right now, you can see the formations collapsing, and the prices in the near term now are being pushed much higher.
Okay. Todd, you grew up in the meat industry. When we come back from the break, I sure want to get your thoughts as what's going on over there. So we'll do that next. Stay with us as we go to break. Let's look at the silver price here. Let's go to the cattle market first, and we'll stop over here in the June fats is where we'll get started this time around. We are up 110 at 98.10 on the June contract. August is up 50 cents, and all of those contracts on the higher side. And the May feeder cattle contract is up 192. Let's look at August. It's up 160 at 132.67. And the September's up 122. Before we go on to the hogs, I want to stop here and visit with Todd about this. This cattle complex seems to be finding firm ground here, Todd.
John, I think so. We've talked about it for a couple of weeks, and we knew that there was a bottom that was near, and I think we've seen it. I think you're going to see a lot higher prices. Again, this goes back to the overall economy as well. Once we have, restaurants are opening and they're opening faster, we're seeing more demand. And I think that the big key here is obviously the slaughterhouses, because our farmers have the biggest issue, and that's the problem is that they haven't been able to get rid of what they got, which makes it worse. But I think now we're going to start to see that flow, which will create much higher prices, because I think the American people have a big hunger for some real protein, and I think that's what they're going to get now. I think we see much higher prices are coming, in my opinion.
All right, over in the hog complex, well, now we did see a little bit of a pullback here. I don't know whether you'd call this correction or not. And we started out the day with those deferred contracts, Todd, leading the way higher. But now we've got June down 17, July down 32. August, October, and December, though, are still higher. That far out, December's up 107. Is this hog market as healthy as the cattle market, do you think, at this point?
John, I think so. Again, it's had a little bit weaker pattern, but it's been much wilder. I do think it's going to be very healthy as well. I think that, hogs will look very strong. Now, again, one of the problems with hogs always is we run in towards the end of the year, although we're only in May right now, but as we run towards and start to look at the December and October contracts, I mean, usually those are a little bit more of a struggle, but when you go out to next year into February, you get much higher prices. So again, I think the meats and the protein complex in general can look for some very exciting things and a lot higher prices. But again, we'll watch the prices and watch the action, but overall, hey, I'm long them all myself, and I think they're going a lot higher.
Okay, Todd, thanks a lot. I hope you have a good day and stay healthy. We'll talk to you again tomorrow. Todd Horwitz, and let's go to the Dow Jones Industrial Average, see where that happens to be trading here at this. And earlier, Marlon was talking about this steadily going higher. We're up 907 points now at 24,424, Christina.